The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, soybeans and the soy complex, the biggest loser on the day, Tuesday. A lot of pressure there, getting through a key moving average in November beans, for instance. Does that open us up to some downside risk once again? Meantime, a little bit of green in the wheat trade. Try to help keep the corn market somewhat near unchanged, I would say, on the day. Pressure in crude oil, decent day in livestock. Let's talk about it. Joining us for a conversation and market analysis, Tyler Schau with agmarket.net. Tyler, welcome back to Market Talk. Hope you're doing well. And by the way, I know you're in central North Dakota, thinking about folks impacted by all the fires out west. Hopefully nothing impacting you in your neck of the woods, Tyler.
Yeah, we've, thankfully, we have not been in the heat of any of those fires. If you get further north and west, they've had a tough go. Saturday was a tough day. Hot, dry, 70-mile-an-hour winds, just a lot of fuel out there from a wet spring. And fires popped up and a couple little towns, town of Ray, North Dakota, send a lot of prayers out for that community. They've suffered quite an immense loss, both in life, property, and livestock. So they're going through a lot, and so we just keep them in our prayers.
Absolutely. I couldn't agree more. And I know there's some resources available for ag producers, ndstockman.org. I'll give a plug for the North Dakota Stockman's Association, them along with the Department of Ag doing their best. And I know the government there in North Dakota, Governor Burgum and others doing their best to respond. So thoughts and prayers. Good point. We'll continue to watch that situation. Well, let's dive into the markets, Tyler, and thinking about soybeans in particular on Tuesday. Tough day, right? Really a tough couple of days here. We got an export sale to China. That didn't really move the market. I noticed, harvest 47% complete nationwide as of Sunday. That took a big jump. Have to think that crude oil lower, better rain in the forecast for South America. It just felt like everything kind of piled together to give us pressure in soybeans on Tuesday. What do you think?
Yeah, I think the starting catalyst was in the overnight. We did China came off about a week-long holiday, and there were thoughts that maybe there was going to be another round of economic stimulus coming out from the Chinese government. That was not the case, and some information got released that their economy is performing poorer than even expected in a lot of cases. And if you recall, it was a handful of weeks ago we saw some financial stimulus that really gave us a shot in the ag commodities or the grain space. Really pushed the markets higher on that stimulus that they were pushing through, and they just haven't added to it. And so there was some fears of the Chinese stock markets have really struggled. The Dalian Grain Exchange saw soybeans, soybean oil, and a lot of their grains really fall apart in the overnight, and that just started the cascade here today. And we had the 20-day moving average in soybeans that really for this last month and a half on this rally have kind of acted as support, and didn't take long to break through that, and just kind of continued that push lower as we move throughout the day.
I think about that downside potential now. Do we go back and test I think the lower Bollinger Band in Novi beans is like 987, if I saw that right. I mean, do we risk going back and testing that level here in futures amid harvest pressure and the Chinese economic news you mentioned, et cetera, et cetera?
There's always that case. I mean, it feels like maybe, this is typically once we hit that 50% harvested pace, a lot of times this is typically where we'll put the bottom in and start to drift higher. Seasonally, there's kind of a seasonal tendency for mid-October into November for beans to have a little rally. So I'm never going to rule out the fact that we can't push a little bit lower and won't see some more pressure here. That's kind of our job, is to make sure our producers are protected from those types of market movements. But I think at the end of the day, it's going to come down now to one of the other topics you talked about earlier, and that's what happens in South America. For a long time, there's been chatter about the dryness. We haven't got real excited about that here because it's the dry season there. Monsoon season is going to start up here within the next few weeks. And typically they, at some point they will get some moisture in that area or some precipitation, and they'll start planting, and they're going to plant a lot of acres. And so that's kept us from getting too excited about that. There are some showers or rains in the forecast, but now the key moving forward is, do those rains actually materialize, and do they meet what they need? Because remember, it's not exactly the greatest soil conditions. So it is monsoon season, so they get a lot of rains, but they need to get those rains.
I know in terms of the U.S. harvest, I've heard a lot of talk, and this is pretty typical. A lot of beans going off the combine straight to town. It sounds like plenty of storage is being left for corn this season versus beans. Are you hearing some of that? Have to think that's impacting basis or will continue to impact basis? What are you hearing? What's your thoughts there, Tyler?
Yeah, we're seeing that the basis on soybeans has deteriorated throughout the countryside. If you think about it, farmers are in that position where they really went through most of 2024, in a lot of cases, not being overactive selling last year's crop. We're in a condition where the price that we spent on the crop to put in the ground well over a year ago, it is far higher than what we were hoping we would get in return for that crop as we're harvesting it. So for the first time, really in 3 or 4 years, you're having a little bit of a cash crunch, for the average producer out there. And so they do need some cash in a lot of cases. They are moving product, and if I'm going to take a truckload to town, I can get a lot more money for a truckload of beans, and get it pushed off, and then I'll worry about marketing my corn and using my storage for the corn market. So we are hearing that. It is pushing basis. It is adding some pressure to basis in the bean market, but it's not really. You're not seeing any type of basis move in corn to the upside for the producer, except in some pockets where they're struggling to source enough old crop corn to get to the harvest time.
That's a good point there. And I was going to ask you about that in terms of corn basis. So, thinking about corn, if we're moving some of it into storage, I mean, I have to think it would be prudent to do some sort of risk management, even if you're going to put that corn into on farm storage here, Tyler. I mean, what do you think about that?
Yeah, I mean, for the first time in many years, we have a strong carry in the market, meaning your back month contracts are in some case 20, 30, 40 cents higher than where your upfront contract is. So, uh, you know, the thought from the producer a lot is, well, I'll just hold it and wait. And if it's already 30 cents higher, imagine what it'll be by the time we reach July. The thing we try to remind our customers all the time is a carry market. When we're in a market like this, the idea is by the time the May contract, which is traded, settled today at 447 and a half. By the time that goes off, there's a very good chance it's going to be down in the range where the December contract goes off. Well, December currently today settled at 420. So if you're looking at marketing out to May, but you're just going to sit on your hands from now till then, there's a very real chance that we could be down to 420 in the May contract by that point, and by not doing anything, you will have given up that opportunity to capture some of that carry. So by all means, our take on it is, if you're going to store corn, make sure you're making sales out in those deferred months, capturing some of that carry, or looking at how can I protect that with some type of option strategy as we move forward.
Tyler Schau with agmarket.net, our guest analyst here today on Market Talk. Let's go over to the wheat trade. And I'm curious here in wheat. We found a little bit of green on Tuesday, so it wasn't a bad day across the board in grains and oil seeds. And I know, of course, we continue to watch the drought issues in the Black Sea region. If I'm not mistaken, Chicago KC December wheat failed above the 200-day last week. So I'm thinking from a chart perspective here, are we maybe capped out on some of this wheat rally, depending on if we get some sort of weather event in the world? I mean, what's your take of this wheat market right now, Tyler?
Wheat market's really being driven by world supply issues. I mean, it is surprising with the trouble we had in the corn and bean market today that we could come in here and say that the wheat market is actually up 2 cents. There were some comments from Russia's ag ministry. They're reassessing some of their crop concerns and late season conditions for spring wheat in Siberia. Um, they've also updated total grain harvests. They're about 90% to where they thought they were. So, they're if you look at the world ending stocks on all wheat, this is like the fifth or sixth year in a row where we've seen declining world ending stocks. So that's one of the things we've been talking about a lot is in the U.S. we've actually got increasing ending stocks, but on the world or the global scale, we got some decreasing ending stocks. You've got some talk about inflation creeping back into the macro economy here over the last few weeks. That's just helped support this wheat market. Um, we did see a failure at the 200-day, but here again, for the last 2 months in wheat, the 20-day moving average has acted as very significant support. In the last two trading days, we went down to that level and kind of bounced off of it. So we're kind of entering that spot where those, the 200-day and the 20-day are going to continue to converge. And I would look for it to break out of somewhere. So, if you're a wheat producer and you got wheat in storage, and you haven't done anything up to this point off of this really good rally we've seen for the last few months, here's probably a good spot to start making some sales or at least buying some puts, because it's very likely we're going to break through either that resistance or that support, and you want to be set up for that situation.
Yeah, you bring up the topic of ending stocks, and I think about we got a WASDE report for the month of October coming up at the end of this week. Are you expecting a lot of substantial change on the October WASDE in terms of the grain markets overall, Tyler? What are you thinking?
We're not looking for major changes. It's not typical to see big changes in the October WASDE report. You could make a case from some of the chatter we're hearing from producers that really dry August really took the top end off of beans. So maybe I could make a case where the USDA is hearing that from farmers in their surveys and some of the data that they pull on. You might see a slight reduction in soybean yield. But in the same token, corn yields have been pretty strong in a lot of the country. So wouldn't be surprised if we don't see a slight uptick in corn yields as we move forward. But I don't think we're going to see any earth-shattering news out of the WASDE report that just really pushes this market one direction or the other.
All right. Well, of course, I think about those reports. They can bring volatility, and we're less than a month from election day too. You mentioned some of the moves in the macro markets, and we're watching energy, of course, and things like that. Just it feels like a lot of outside factors could be at play here in the ag markets. Really, as we roll through harvest here and towards election day and get into the back half of the year, I guess when I think about the potential volatility that could be out there, Tyler, that's really again where risk management comes into play, right?
Yeah, I mean, there's too many things, and there's always too many things going on in the world to have a thumbprint on where these markets are going to go. In today's world, it's just amplified. It feels like we've got massive weather events occurring all over just the U.S. Extremely hot and dry in the West, most of the Midwest, for that fact. Drought creeping back in. You've got massive flooding and hurricanes going on in the southeastern part of the U.S. You've got those types of weather issues really all over the globe impacting production. You've got macro issues, whether it's different countries' financial pictures. You've got geopolitical events coming out of the Middle East that are fueling commodity markets, specifically energies. If you're going to try to say you can have your thumb on all of that and know where these markets are going to go, you're probably fooling yourself along with anyone that'll listen to you. This is where you've got to define what your risk is. For most producers, that's going to be to the downside, especially if you're undermarketed or haven't sold as much as you maybe should. So the question constantly has to be, am I protected in case these markets do fall further? Even though I would like to maybe think the bottom got put in, what's my disaster plan if it goes even lower?
Livestock perspective, good day in cattle and hogs on Tuesday. In fact, I think November feeders closed above the 100-day moving average at the close. Your thoughts on that feeder cattle and live cattle market from Tuesday?
Feeder cattle have shown strong strength really since they put that double bottom in early September. The cash market's been good. Reports we're hearing out of sale barns really across the country is these calves are bringing good money. That's it's kind of the opposite of what it's been the last few years. The last few years, if you sold in those summertime internet auctions, you brought way better dollars per hundredweight than you did if you waited and sold them in a local sale barn. For whatever reason, that's changing this year. It does kind of feel like maybe we're starting to see the start of a herd rebuilding program. Heifer values have really increased. I was checking out some results from a sale in South Dakota, and the heifer prices on good quality heifers were really, really good coming out of that market anyhow. So that could be that we're seeing a creep in that heifer retention program. And if that's the case, that's just the market gearing up for a lack of an even smaller number of pounds that are going to go in that live cattle market as we move forward.
Hogs too, real fast. It feels like that hog market's maybe losing a little bit of fundamental support here, trying to search for more. Watching to see, can December futures catch up to October, for instance? Any notes in the hog trade? What are you watching over there?
If it does, that'll be interesting. That the contract high on hogs, I believe, is just shy of $80, and so that's been well below where the front month hogs have been trading for the last several weeks. So if December hogs can climb over that $80 mark, I think that would be a good sign for the hog market as we move forward. Might help with some of those back months as well. It does feel like maybe fundamentally, that I'm struggling to find a reason, really, to be honest with you, in both cattle and the hog market, fundamentally, why we need to be pushing as high as we have here recently or holding these levels. But for whatever reason, the market's wanting to throw some money at that market and keep it propped up.
Good stuff, Tyler. Final thoughts? Anything else you want to mention or reiterate to producers listening in here today?
Well, I mean, we touched on this, and I don't want to make it a cop out for the brokerage industry or the analyst industry, but I just do think, going back to that concept or that thought of all the things that we talk about whenever I get interviewed by you or whomever, that are forces on these markets, and they're pulling both directions, right? They're pushing prices lower, they're pulling prices higher. It's all but impossible to have your thumb on what all of those are going to have an effect on all these different markets. So I really try to talk to my customers anyhow. We really try to focus with our group that it's about defining where our risk is, and then how do we manage a worst case scenario moving forward. A lot of times we lose sight of the forest because of the trees. We get caught up in the day-to-day movement, but it's really important to evaluate where your operation will look like if beans are below 950 or corn is below 385 as we move forward.
Well, I know your guys' website, phone call, a lot of different ways to get in touch and work with you guys there, isn't there, Tyler?
Yeah, check us out, agmarket.net, and we'd love to visit with you about your operation.
Agmarket.net for more information. Tyler Schau, always good to talk with you. Thanks for joining us on Market Talk today. We appreciate it.
You bet. Take care, Jesse.
Make sure to subscribe to the Market Talk YouTube channel. There, you can watch our latest interviews with the top market analysts in the country, find bonus content, and much more. Just go to youtube.com/markettalkag and hit the subscribe button, or you can search for Market Talk Ag on YouTube.